Today we are going to analyze the effect of business transaction. 1. On October 1st, Mike begin business with cash $50,000. This transaction will increase assets and equity. The first balance sheet of the new business will show cash of $50,000, equity of $50,000. On October 2nd, 2022, Mike took a loan from Jake $20,000. This transaction increases both asset and liability. In the balance sheet, the cash will increase by $20,000 and creditors by $20,000. On October 3rd, bought for cash a computer $58,000. This transaction decreases one asset, cash, and increases another asset, equipment. Now after this transaction, the cash will decrease by $58,000 and equipments increase by $58,000. On October 4th, bought computer supplies on credit $6,000. This transaction increases both asset and liability. In the balance sheet, both supplies and creditor will increase by $6,000. On October 19th, received payment for software sales $12,000. This transaction increases both asset, cash, and revenue in equity. So the balance sheet will show both cash and equity increased by $12,000. On October 21st, paid creditor for supplies $2,000. This transaction decreases both asset and liability. This transaction will decrease both cash and creditors by $2,000 in the balance sheet. On October 29th, paid salaries $4,000 and office rent $1,200. This transaction decreases both asset and equity. The balance sheet will show both cash and equity decreased by $5,200. On October 30th, sold software on credit $8,000. This transaction increases both asset and equity. Now in the balance sheet, both account receivable and equity will increase by $8,000. Now we have balance sheet at the end of month in which total assets are equal to total liability and equity.